The wage is not keeping up. The gap is bigger than the Great Depression between wages and affordability. I mean, that's a great stat.
Sad stat.
Yeah. The cost of health insurance going up. Existing home prices are already up there, right? So that begs the question, is there a market correction coming? Is there a crash that may be coming to some degree?
I don't think so, because we don't have houses on the market. I think because we don't have enough houses, it's not going to correct in housing. I don't think that's the way it's going to correct. I think it will correct in some other way. I don't know what that is, but we just don't have enough houses for it to be.
So you think the demand will always offset the ability for the crash to happen? Because
not always, but right now.
But in this instance, I should say in this instance.
So I don't think, in 2008, there was a reason to get out of the house because you couldn't afford it.
Sure.
And they were kicking you out. Right now, so many people have those 3% or lower interest rates. They can stay, and afford their home. So I think that's a major difference between the 2 years.
Mm-hmm. They're staying in their house and they can afford the house that they have. They can afford the house.
And they can
but the groceries, they're like drowning in.
Exactly.
The electric, the utilities, it's other stuff, the health insurance. There's
college tuition.
Should have had her go in New Mexico.
Oh my gosh.
We thought it was close enough. But we didn't get it. She was too smart. She got a scholarship that kicked us back to out of state.
Yep.
Oh my gosh. Oh heavens. Yeah. So you have all these factors coming into play.
What do you think? Do you agree or disagree?
So I do think that there's going to be some form of a correction, but I do agree in the sense that there's just a shortage of inventory. So whether you're sitting on a 2.5% or 3% interest rate, what are you going to do? First thing you're going to do is you're not going to go buy Starbucks as much. You're not going to buy the Heinz ketchup. You're going to buy the Safeway brand ketchup. You're going to do all these things to try to trim off, but you've got to keep your house because you can't move from your home to something else that's
it
less
costs
affordable.
You more to go into a rental.
And so that's what in real estate, we need movement. Movement is key for us. It's part of our jobs, part of our business. We need movement. It's becoming stagnant because people are not wanting to move for those reasons.
I think the car industry and fun industries are going to take a bigger hit because I think people are going to get a more affordable car because you still have to get to and from work. But I think those are what we're going to see is like these things that people are spending luxury money on, which housing is and isn't a luxury. Like everyone should have access to housing, safe housing, but like nice cars, not using public transportation, going out and going to all these fun things that are locally owned, whether that be a trampoline park or a pumpkin patch or, all of these little things. I think we're going to see a hit in that regards because frankly, if a house came up that was good priced, we all have buyers for it right now. We all have buyers for those things and not just investors either. People that are, it'd probably be different in a different city. But right now that's kind of, I think, where we are.
Now we have seen housing inventory rise. So more inventory come on the market for the last 20 months in a row. And that may play into the Fed's decision to lower the interest rates a bit. Now, this is a common misconception, probably if you're watching this or listening to it. You think that whenever the Feds lower interest rates, automatically that lowers interest rates on mortgages. Mm-mm. And that is not the case. Paul, do you want to talk to that a little bit more?
Okay. Well, mortgage interest rates are tied to Treasury bonds. So really, people buying the confidence in the United States economy. And what we're having right now is people not wanting to buy into the economy or starting to, but because we are getting better, but the tariff craziness that we've had over the past year, coming out of the last administration and coming into this new administration, they kind of changed everything that the economy was trying to do. So people held off, and that's why economy is getting a little bit better. That's why the Fed feels comfortable lowering rates, but we're waiting on the rest of the world to agree with them.
Yeah, because you have all kinds of factors that go into the Fed's rate. Unemployment, inflation, housing, all of these things kind of factor in. And it's a big lever because we became addicted to low interest rates. And that wasn't necessarily a good thing either.